every stock or company on this list that we will talk about today has gone up over 100% in
Mm.
just 1 year.
Hello, listeners, and welcome to another Semi-Doped podcast. I'm Austin Lyons of Chipstrat, and with me is Vic Shaker from Vic's newsletter. So, Vic, quick, let's start with a plug for your newsletter because I think you wrote something really interesting this week. You wrote about CPUs for AI, and I thought it was super timely because on NVIDIA's earnings call this week, there was some Q&A talk about the Vera CPU, and Jensen talked about how it was great for post-training and had really great, I think he called out the single-threaded performance. And so this reminded me of your article because I think the underappreciated thing, everyone's been talking about the demand for CPUs for AI, but people haven't taken it a level deeper and said, well, what are those AI workloads and which CPUs fit the different types of AI workloads better? So, for example, like having many threads for and cores for agentic tool use is something that you called out and I thought was really interesting. So, like, give me your quick thoughts on that article.
Yeah, so in that article, I have like basically a sliding scale of whether any given CPU from any company, whether it's x86 or ARM, can be put into more of a reasoning heavy workload where it's like only job is to have fast single core performance and make sure the GPUs are fed really quickly and that utilization of the GPU is held high. And on the other end of the sliding scale, I basically have categorized what are called action heavy, workloads, where the CPU does a bulk of the lifting. Maybe it goes and scrapes a web page, does some API calls, and looks up a database, that kind of stuff. And the GPUs, it is being constantly used, but the critical point is that you need a lot of CPU cores so that you can handle multiple agents. And all these agents are going to keep the GPU completely fed. So after that, with that framework, I have like 9 different metrics you can rate a CPU on. And so to follow up to that concept, I have like this yellow pages of all like popular CPUs that are ranked on these 9 metrics and then sorted into somewhere on this scale of reasoning versus action. Some of them fall in between. Some of them fall they don't do well either way. So
Mm,
it's a very gray area. I'm
interesting.
trying to sort out exactly what agentic AI needs in terms of CPU. So that's the whole article.
Nice. I love it. And if you're a CPU designer, you should read it and be framing your portfolio in terms of AI workloads. Like, tell us. I want to hear from companies. Tell us, this is our SKU that we think is going to be awesome for agents. Like, would love to dig into that more. So, anyway, everyone go check out that article. And I'll give a quick plug for Chipstrat. I did a deep dive on Arista this week, earlier in the week, talking about how the Ethernet TAM is expanding, not only for scale out, but for scale up, for example, with eSUN that Broadcom is championing, and how that can benefit Arista. And then I also had a fun look at a startup tackling the economics of lithography. This is a US based company called XLight, super interesting business. They're using particle accelerators to generate light, and then you would feed that light into ASML EUV scanners. So instead of doing the 10 droplet LPP light source is what it's called, you'd actually use a particle accelerator. You can power many scanners with one particle accelerator. And then the business model is super interesting too, which I dig into. You can think of it as like photons as a service, which is really just like a utility. Like, what is our electric utility? It's nothing but electrons as a service, right? So this would be a
Yeah,
similar idea.
yeah.
Um, and finally, Pat Gelsinger is the chairman of the board on this company. So always interesting to see industry luminaries helping out startups like that. All right. So, Vic, let's get into the podcast. What should we talk about this week?
So last week we spoke about all these optical technologies because optics is all the rage right now. But in the episode, we actually said we'll talk about the technologies and then the companies. But then we kind of ran out of time, and one of our keen listeners commented and said, "Hey, where are the companies you promised?" So this is like the follow up to that podcast episode. So we can dig into some names. Obviously, there are a lot of names in the optical space, all of which are very interesting, and all of which are doing like well right now. But for the sake of this episode, we're going to like limit ourselves to some of them. And if we left out any, let us know in the comments. We'll talk through them in the future, because this is how we know what to create next, right?
Yeah, totally. Always love to hear from our listeners.
Yeah, let's do that. Yeah, let us know. So we will follow up with whatever information we could dig up on all the interesting stuff that's going on. But instead of just talking about companies, I propose that in this one we play a little game. So the way we'll do it is, Austin, I'll tell you what the company does, and why it matters, what the moat is, and basically why it wins, and also what its risks are or what the bear case might be. And then you can tell me if you feel like you will buy the stock or you will not buy the stock, why or why not. And I'll kind of pitch in and say what I think of it, and we'll move on to the next one. And be warned that a lot of every stock or company on this list that we will talk about today has gone up over 100% in
Mm,
just 1 year. Okay, like the first one we will talk about has gone up 1,000%. So that's the way it is. So we're not going to look at it from the point of like price to earnings ratio and all that kind of stuff. It's just like, let's see the core thesis, see if it
mm.
makes sense, and give it a thumbs up or a thumbs down, or even a maybe, or maybe, or not right now, or something. Doesn't matter. It doesn't have to be binary. And then we'll take it from there. So it's kind of keeps it interesting and not like drab as we go through these companies. What do you
Sure,
say?
sure. Yeah, sounds fun. I will say, not financial advice. Do your own due diligence. Don't invest in this or any of these companies because we say so. This is just a fun way for us to think through the company's theses and their moats. Totally.
Yes.
All right. Where should we
Right.
start?
Okay. So I think this one I will let you explain to me, and we'll see we'll see what comes out of it. Like, why
Okay.
don't you
First
do the
one on the
first one?
list, AXT Inc. So this is a $1 billion market cap company. You would call them a micro cap, really. It's a pretty small company. They make indium phosphide substrates. So this is the base wafer that every EML laser and silicon photonics component starts on. And AXT, which I think I don't have it written down, but I think they're headquartered in California. They have 60 to 70% of global share. And I guess why we would be talking about them right now is they would sort of be at the very bottom of the optical supply chain, in that everyone, downstream depends, or above them, if you will, depends on indium phosphide substrates. So if you don't have the substrates, you can't make lasers. If you can't make lasers, you can't make transceivers. If you can't make transceivers, no AI optical networking. Um, so obviously that would be a key, bottleneck. Even if they aren't huge, they are very important. Um, so I think, when you study AXT, the moat there would be, so then, you might ask, oh, wow, if they have all this market share and they're pretty small, couldn't other people just jump in and also start making indium phosphide wafers? I think that the moat here that they can ride on is that indium phosphide crystal growth, it's not trivial. It's sort of part art and part science, part material science, decades of process know-how. Um, and obviously, just because you make something that's hard to make, you still have to take it to market. And I think AXT, and listening to their most recent earnings call, they have a lot of the biggest names that are buying from them. They've got a massively growing backlog. You can tell the demand is huge, and obviously they should be tied with the inflection, like the optical inflection. Again, if you start with the AI racks, like the more optical fibers and lasers that they have, a rack has, as these data centers get bigger and bigger, and the more maybe scale up CPO that happens, like this all sort of ties to needing more indium phosphide. Um, let's see, if I have to think through risks, I think maybe one interesting, almost irony here right now with all of our geopolitics is that this is a very important optical supply chain component, and it's an American company, but the substrate is made exclusively in Beijing and therefore subject to Chinese export controls. So we're not talking about American export controls into China, but actually Chinese export controls back to the United States. So that's obviously on their earnings call, they actually had for the first time, some permits were delayed from the Chinese government, and it actually impacted their revenue. So that would be the big risk. One big risk for this company is just how much of their company is dependent on geopolitics and maybe things that are a lot harder to directly control. So how about I pause there? How's that for like a high level overview?
Sounds good. That's a good overview. I think it has all the pieces in there. I just wanted to add, like, they have a significant market share, like 50 to 60%, which is why they are dominant. But the competitors would be like Sumitomo. Um, I think they have something like a 25 to 30% share. But like the fundamental problem, like in what you explained here, was not what you said, but with the company is that their manufacturing is subject to Chinese export controls. It is not in the hands of the United States, even though it's a US company. And if you look at the stock price of this company, it was about $1 or $2, but which has gone up to like $40 in the last year. So, and if you look at the earnings and their numbers, like their next quarter guidance is uh, -4 cents to +2 cents earnings per share, which is like almost. I mean, they make what's funny about this is that I think people who ended up buying this stock at like $1 and sold it at like $40 are making more money than the company itself. So it's kind of funny. So if you ask me, would I invest in this? I'd say no, even though the entire AI industry hinges on this. But the fact that it is subject to a foreign government's whims and fancies, and that the earnings per share is almost zero, and the stock is at like extremely elevated levels, growing over 1,000%, puts it out of the range of risk for my personal taste. What do you think?
Sure, totally. Yeah, yeah. I mean, it feels like that's going to be the common theme with any up and coming component supplier in the optics supply chain, which is probably as they're growing, their earnings per share aren't going to be huge. Maybe they're even not profitable yet because they've got to invest into more manufacturing capacity, for example. And yet, people who have like smart investors have already said, oh, let's look up and down the supply chain and invest in these companies. So if they've sort of inflated their price ahead of the growth of the company, the argument is probably like, it's not that it's not investable, it's just not now. Like it's always a timing game as far as like, is it priced to perfection? Now, as for the not investable part, you make a good point that people have to be comfortable with the risk
Hmm.
of the Chinese export controls. So if you're investing, that would be a risk you'd have to be comfortable with.
Yeah, yeah. I mean, there are no people who are going to invest in it, but maybe this is this is why I don't make any money. I'm very risk averse. So, you know, be noted that whatever I say is going to come from a background of being very risk averse. But yeah, maybe we go. Should we go to the next one?
Sure, sure, yeah. Well, let's see. So we talked about substrates. You should take it up a level. Let's go to manufacturing. Why don't you talk Tower Semiconductor?
Okay, let's do Tower. So Tower Semiconductor is today the undisputed leader in the silicon photonics foundry. So what Tower actually does is they are like the TSMC to all the chips that the fabless companies design. So Nvidia makes like the GPU and they give it to TSMC. They make the chip and they give it back and then they sell it, right? Nvidia sells it. So that is the Tower equivalent for the photonics industry. So companies can make photonic designs, which means they make these waveguiding structures and Mach-Zehnder interferometers or ring resonators for modulation. All of this stuff happens on the silicon photonics chip, and then it's sent off to Tower Semiconductor, who manufactures it and gives it back. The thing is, they also make other things. They call themselves the specialty analog foundry. So they don't really focus on digital technologies. They more focus on silicon germanium, which is very important for driver circuits for lasers. And they also do RF and power chips, power ICs, and things like that. They are actually an Israeli company, but they have a fab in Newport Beach also.
Hmm.
So they have such a strong, hold over the silicon photonics uh, wafer fabrication market that I think 7 out of the 11 top datacom transceivers all use Tower, and they have a very big market share in what they do. So for the optical world, and when it comes to this new generation of 1.6T, which is really ramping heavily in the industry, they stand to be the dominant player in this game. I have a quote from the last earnings call from their CEO, Russell Elwanger. He said, Tower's exceptional ability to scale the capacity flawlessly in partnership with our customer has made 1.6 Tbps the fastest growing silicon photonics node in the industry to date, with Tower being by far the majority supplier of 1.6T silicon PICs, photonic integrated circuits. So that's their position on this thing. And from their last earnings call, right, their revenue has grown significantly in this area of SiPho and SiPho silicon photonics and silicon germanium revenue. It's grown like 75%. And if you look at SiPho alone, it's grown like 115%. So it is like a doubling every year kind of thing. And it is expected to even continuing to double through 2026. So that is their stronghold over this thing. And they also announced that they are going to 5x their silicon photonics wafer capacity by investing 900 and I don't know something $950 million in additional SiPho capacity. So think about that, like they're
Wow.
5xing their silicon photonics wafer capacity. And this is not just like because they feel like it, because they actually said that 70% of all the capacity has already been reserved through 2028, backed by customer
Wow.
prepayments, which means they've already paid for it and they're using that and expanding up to 5x the silicon photonics.
Amazing. Yeah, you can get a good rate on the debt you take out to build plants
Yeah,
when it's backed by
it's a
customers who
significant
have
de-risking.
prepaid.
Yeah, absolutely. It's significant
Yes,
de-risking. Yeah.
totally. And I believe I heard on the earnings call that they went so far as to say, like, hey, we're not even pressuring customers to prepay. They are offering it up because they care so much
Yeah.
to kind of get in line and like reserve that capacity.
Yeah, that's the thing. And they're all over the silicon photonics thing because they announced some partnership recently, within the last 10 days, I'd say, with Sintel Photonics to make these DWDM. We spoke about this for long haul optics,
Mm,
which is dense wavelength division multiplexing. But that's going to be like used for CPO apparently. And this is like the slow and wide approach, like HBM is to a GPU, like DWDM laser is like way to transmit optical data, where each lane isn't really fast, but you got many parallel lanes and you can send a lot of information. Just like HBM is, like
sure.
each lane isn't that fast, but you have so many parallel lanes of electrical connections. You can send memory like high bandwidth. Same idea. So they're doing it with Sintel Photonics. They also recently, I think 2 days ago, announced some partnerships with Salience Labs for optical circuit switches. So really, this is a foundry that is like really well positioned to hang on to the upcoming optics wave, and because all the wafers, if they're actually available from China, from AXT, you know, this is the company that would actually process them into meaningful circuits, right? So this is the next
Sure.
layer of the cake. All right, what's your take?
Yep. Yeah. Well, so it sounds like a very definitive business that it's already a strong business, and I think it's fair to say we can see that it's going to grow. It's not speculative. How about that? Um, they're ramping up capacity 5x. It does make you wonder, like, oh, are we going to get to an oversupply situation? Especially as we'll talk about, Global Foundries is going to ramp up their capabilities as well, and so uh, you know when we look at the logic market, it's not quite good analogy because TSMC is kind of the monopoly there. And so if you look at the logic market, you'd say like, oh, it's just going to go up and to the right forever, like GPUs, and TSMC is
Hmm.
just done awesome because they're the only one that can make it, and it's so important. Maybe when you look at this space, you could argue like, okay, well, it's a little bit different because there actually is going to be a competitor. And so there could be some price dynamics, and especially as they're both ramping up capacity. On the other hand, it takes a long time to turn on capacity. People need all of these silicon photonics chips today. They yield matters. So as we see with like in logic, as others, Intel Foundry and Samsung are trying to catch up, obviously it takes time to ramp, not only to like be able to do the process node, but to be able to ramp it to manufacturing scale where you have really good yield. Um, there's also a lot of risk, I think, for people when they switch foundries, or like dual source is not free, right? And so there's all sorts of incentives to think about, and generally even your investing timeline matters too here, but it does feel like you could safely say like, wow, it looks like Tower is really well positioned for the next several years. If logic is anything, and then of course, if you look, maybe a better analogy would be a memory manufacturing where there's three
Hmm.
competitors. And yet the whole pie is growing. All three competitors are doing well. Obviously, HBM is in wafers were in high demand, DRAM wafers, high demand, even storage and so on. And so if you look at those other manufacturing markets as analogies, it's hard to see how Tower doesn't continue to do well here.
Yeah.
So I say all that to say it feels like a lock for investing in them.
Okay, good. So I agree with you, but I wanted to mention two things. The first thing is that actually, when it comes to a wafer fab like this, having a lock-in in a process technology is actually a big deal. It's very
Yeah,
difficult to swap out, because if you have a legacy of products, you just iterate on them and you figure out all the yield issues, all of that stuff. You have a good relationship on both the design side and on the wafer pricing when you can promise large quantities of wafers, and so that tends to become a lock-in and a moat actually, if you can be the dominant player, and people, it is hard to come in as an alternative, right? The same thing that happens to
sure.
TSMC's awesomeness in digital circuits. So it is no competitor really, although there are like, a second place is like a far away second. And the other thing is that in the world of HBM, when you have three companies, then they are like trying to all get a growing piece of the growing pie, it is actually possible because there are things like a JEDEC spec that determines what the connectivity speed should be. And so as long as any supplier can meet those electrical specs, and then you can get enough supply and pricing, uh, companies are willing to swap out or
Mm,
de-risk by having multiple suppliers and putting them against price constraints against each other. It is possible to do that, but it's a lot harder when it comes to foundry technology because, like I said, moving is a difficult process. And so sometimes companies do have parallel fabs running, but it's a lot of internal work to do that. So that is actually a
sure,
benefit
sure. And
for Tower.
I think you're calling out the difference too. Like it's not fair. It's not apples to apples to compare to memory because those memory manufacturers are vertically integrated. They're IDMs. They're making the end product and then selling and competing on that product, the actual memory, which is a bit commoditized in the sense that there is a spec and they can all show that they meet the spec. And so, yeah, it would be more analogous to look toward TSMC, where it's just pure foundry, not also making the product.
Yes, yes. All right. Now that's I agree with you. I'm very bullish Tower. Let's talk about global foundries. I'll let you take this one.
Okay, Global Foundries. So, who is competing with Tower in the fabrication of silicon photonics chips? Global Foundries is trying to play there. I think most people probably have heard of Global Foundries. It has a long and interesting history you can read about. I actually touched on some of it in a Skywater post that I wrote. Global Foundries is a sort of foundation node uh, foundry, meaning they're not making the leading edge 2 nanometer chips. They are the third largest pure play foundry, and they have more business lines than just photonics. They do traditional analog, RF, CMOS. Um, but they do have GF Photonics, spelled with an F,
Mm.
Fotonix for listeners, GF Photonics. And that is the only 300 millimeter monolithic SiPho plus RF CMOS platform. So you can have photonics and electronics on a single chip. And so, why do they matter? They are the alternative to Tower for silicon photonics, trying to catch up. They do have lots of big brands, partners: Broadcom, Cisco, NVIDIA, Marvell. And let's see, what other notes do I have? Interestingly, the government is sort of putting a claim on them and championing them. They got a $1.5 billion CHIPS Act money for domestic silicon photonics. They also acquired AMF, Advanced Micro Foundry in Singapore, which was the world's first specialty SiPho foundry. It was a 200 nanometer foundry with plans to scale to 300 nanometers.
Ah,
So that was a bit of a land
millimeters.
grab.
Yeah, I
Obviously,
think you mean millimeters,
millimeters. What did I say?
nanometers.
Oh, nanometers. Yes,
That would be
millimeters.
a tiny
Yes,
wafer.
300 millimeters.
Yeah.
Thank you. Teeny tiny wafers. Now AMF's not huge, 75 million in revenue, but it is acquiring the know-how and acquiring fab space. What else? So I think the 300 millimeter global foundry thing is very interesting. Tower is predominantly 200 millimeter, and as we kind of talked about in our last podcast, this is a difference in the size of the wafer. Obviously, the bigger the wafer, the more chips you can get per wafer, and so you can bring the cost per chip down. I think there was a quote from the Global Foundries earnings call from the CEO that said, "We're scaling silicon photonics in Singapore and the US, including on a 300 millimeter platform, which again, we think gives us a lot of opportunity to grow the business and differentiate going forward." So again, this is just how they can very quickly expand capacity, not just by building new fabs, but by having bigger wafers. Um, so let me pause there. I guess I don't know if I've talked too much about risks. So let me hit on risks quick, actually. Risk. So when you're investing, if you're an investor and you're investing in Global Foundry, Silicon Photonics is only a small part of their revenue today. So they have other business units. Traditionally, it's been smartphones, which is the smartphone business unit, I think, is shrinking, or the total revenue is shrinking. Another big business of theirs was IoT, which I believe is shrinking. Automotive is a big one, and that one's growing. And then, of course, Silicon Photonics, data centers is growing. So if you're investing in Global Foundries, sort of like as an umbrella parent company, you have some companies that are or some business units that are poised to grow rapidly, but then you also have some business units that are a drag on corporate margins. And so that's kind of what you have to be aware of. And this is not unlike investing in, say, even like fabless chip companies like AMD. You're not just investing in their Instinct line, you're investing in their CPUs and in their embedded business and gaming business and so on. So it's just something to be aware of. So let me pause there. What's your reaction to Global Foundries as an investor?
Actually, this is good. So now that you have introduced Global Foundries, I wanted to now use this to quickly hit upon the risk to Tower Semiconductor, because Global Foundries is a pretty big company. Like what is it like? As a third largest pure play foundry, right? That's what. So that's behind TSMC and Samsung. This is a pretty big company, and it was actually IBM before it was like became Global Foundries. So
Mm-hmm.
and around 2007 or something, not 17, I think, they decided they will not do leading edge anymore, and they'll just stick to something like 12 nanometers and above, make what are called like essential semiconductors, and focus there because the cost of running advanced lithography machines was like too much even for a foundry of this size. So now this actually poses a threat to Tower in a sense. The reason is this is a big player. This is not somebody you can just like trifle with, because if they do have a good technology, and that is a big if, because from
Mm-hmm.
what I've heard from people who work on this, and again, this is totally anecdotal, and it probably has a lot of personal opinion signed into it. But it's like people don't really seem to like the photonics platform. They prefer the Tower Semiconductor. I think there's a lot of things that play into it. The PDKs and the tools that you design with, a lot of preferences exist in the design world. So when you size all that in, it could pose a big problem for Tower Semiconductor if Global Foundries does pick up a significant portion of the silicon photonics business. And the other big difference I would say between Global Foundries and Tower is that when they integrate silicon onto their photonics on their platform, the SiPho platform, it is actually bonded separately, and it is still on a 200 millimeter process. Now, in Global Foundries, they actually have a monolithic, which means that there's no bonding involved. They make the CMOS after the silicon photonics together, and you get them on 300 millimeters wafers, which is actually also cost effective. And when you have something monolithic, which means you don't have to bond it, it is a both simpler, and it gives you better electrical or photonic performance because there are fewer parasitics when you have to like attach two things. The monolithic is always
Mm,
preferred, but that doesn't mean it's easy to do. Like having a monolithically grown process on basically 300 millimeter wafers isn't an easy process. So that is a challenge for what they have. So is so finally, okay, what's the verdict then? Considering that GF is actually gets some aid from the US government. I think they did get some CHIPS Act money. So there is a benefit there that US government would rather bet on GF rather than Tower's Israeli presence. Um, I think that I would still go with Tower over Global Foundries when it comes to silicon photonics. So
mm,
it's not like it's a bad buy, but considering that silicon photonics is a very small portion, I think right now it's only like 3 to 5% of global GF's overall revenue. And like you were saying, it is fast growing, but they have so much stuff like mobile and IoT that is dragging their revenues down right now. This has to grow to a meaningful size of the pie before it actually makes significant sense to go and invest in.
right, right. Yeah. So if you're trying to, really invest in silicon photonics, the more pure play would be Tower.
I think so, yes.
Totally. Totally. All right. So let's see. So we've talked substrates, we've talked manufacturing. Let's go up yet another level. Let's talk lasers. So Vic, the most popular name, Lumentum or Light is the ticker that everyone's tracking. Give me a rundown.
Yeah, I get all the easy ones. I get all the bulls, you get all the bears. Everybody loves Lumentum. I mean, what's not to love about it? The stock price has crossed like $750 from, I don't know, $300 just a few months ago. It's like everybody's favorite right now because they are the dominant maker of laser components for optical communications, right? And that's because they make these things called externally modulated lasers, which goes into every transceiver you can think of, whether it's 800 gig or 1.6 1.6T. And so they have a lion's share of the market. I think they have like a good 50-60% share of the EML market, and their demand is so high that it like outpaces their supply by about 30% according to their last earnings call. So everybody wants these things, right? There's and not only that, they have uh, a growing demand for their optical circuit switches, which are purely MEMS based,
Mm,
that had absolutely zero backlog. Um, and now there's like in the last earnings call, there was like a 400 million backlog on that. So it's like a market that didn't even exist. But now OCS has become a thing for Lumentum, and they are in the driver's seat on OCS. So that puts them in a very strong position. And in addition to that, they have a very good ultra high power laser for co-packaged optics. because you need lasers that are like significantly more power than you would use in like externally modulated lasers, because the laser is going to be present external to the rack like we spoke about in the last episode, and then the modulation happens on the SiPho chip. So you need like reasonably high power in order for the light to make it well into the chip, and so you can modulate it or whatnot. So they have all these technologies. They have EML, they have CPO lasers, they also have OCS that is like literally growing rapidly, and their revenue growth has been short of nothing short of exceptional, really. And they say that their 200 gig EMLs for 1.6 T transceivers was about 5% of the revenue in late 2025, but it is expected to reach 25% of their revenue by 2026, because
Wow.
it is significantly higher ASP and margins for a 200 gig EML compared to a 100 gig EML. And their performance of the EML is unmatched as well. It is so much so that the next company we're going to talk about that also makes EMLs is actually buying from Lumentum their EMLs, which is like weird. You're making your own EMLs. Why would you buy from Lumentum, those EMLs? It tells you something about how good that is. So they have a very good technology, and I think the fundamental, we've gone on like long enough about why it's so amazing and all that. But really, this is something I've been looking at longer term too, as in writing an article about, because um, see, really, it's like 700. Like when you see the street estimates for the stock price, I even see something as high as 900. Okay, like this is a really high stuff. Like, would anybody invest in this thing at this price? Is this something that is still
Mm.
is there still room for this thing to grow? I mean, yeah, there's a lot of demand and all of this stuff, but what is the fundamental moat that this company has, and why should anybody, get into this at this price? So fundamentally, I think that their know-how about how to make a laser is very good, because it comes from the epitaxy behind making these crystal structures to engineer these lasers, and that is very important to do, and that is not very easy. It's a good moat that it's very hard to get along, get out of. So that is one of their big know-hows that is like really good that they can do this. But the risks, I would say, is that if there's any kind of slowdown in the AI capex, that's going to hit them very hard, because they're all like entirely AI dominated, really. This entire thing, they don't have like it's a pure play laser thing, really. All of that data center stuff is for AI, So that's a big problem. And then there's the other constraint is that if their competitor comes in with a cheaper laser, which is entirely possible, then they're going to get seriously undercut, because they're still making their lasers on 3-inch wafers. So if somebody comes in with a 6-inch wafers, producing 4 times as many laser chips per wafer, that's going to drive the prices of these like much wanted, highly backed up, high in demand lasers down. So at these prices, as much as I would like to say buy Lumentum, I don't know. Oh, I don't want to poison you. Sorry, you're supposed to tell me that. I didn't say that. Take it back.
Okay, okay. Yeah, well, I mean, it sounds like the company is very technically adept, has good R&D, and is just crushing it. Obviously, it sounds like a timing thing, and a year ago would have been a no-brainer. Now, I do hear what you're saying, which is like, okay, are you going from like this thing doubles annually to this thing goes up 20%, or probably actually just like tracks the capex growth broadly, you know? Like, oh, if capex is growing 50% or 20% from the major players, does that just mean like, okay, Lumentum's going to grow 50 or 20% or whatever? They're going to have more competition. Yeah, there could be pricing, uh, you know, competition as well to deal with. So it does feel like a awesome company. And now doesn't feel like the right time.
Yeah, it seems that way though, but people have been proven wrong on this SanDisk and Micron stocks in the past.
That is a great analogy, right? Where like you could have every month for the past 6 months, you could have said, oh, memory, way overpriced. Now's not the time. And it keeps going
Keeps
up.
go so I don't know. Hard call, hard call. Company has a really strong fundamental basis for why you should invest though. Their fundamental thesis is very
Sure.
strong.
There you go. All right. Let me talk Coherent
Yes, the
next.
competitor.
Um, their competitor. Okay. So Coherent, I think it's roughly the same market cap, around 50 billion or so. They are a broad photonics company. They make everything from um, indium phosphide and gallium arsenide substrates to laser chips to complete transceiver modules. But they also have other business units, silicon carbide for EVs and industrial lasers. And by the way, I listened to a what was it? Maybe it was like an analyst day or something. This like 2 hour presentation from Coherent, and their CTO Julie Sheridan Ing, I believe her name was. She did a really good job. It's really worth the listen. Julie, if you ever happen to listen to this podcast and hear this, we'd love to talk to you. I thought it was very educational. I thought she was cool. So okay, back to Coherent. So they matter because they're fully vertically integrated from substrate all the way up to module. They do have three different 1T transceiver approaches. So they don't have all their eggs in one basket. They've got EML, electro absorption modulated lasers. They've got silicon photonics, SiPho, and VCSEL, vertical cavity surface emitting lasers. And so these all have different pros and cons, and they make all of them. As you've talked about, their moat could end up being 6-inch indium phosphide fabs. So making, again, maybe more than 4x devices per wafer than a 3-inch, maybe only 60% of the, or like 40% of the die cost potentially. Um, and so, you know, as you said, just essentially flooding the market. If the performance is good enough, they in some respects they can sort of flood the market with capacity with chips. Um, from their earnings call, you know, why they said they'll win. They said they have huge demand visibility for the next several years. They use the term book to bill is above 4x. So I think that'd be like for, you know, every 25 chips they sell today, they've got a backlog of 100 chips that are just waiting to be fulfilled. Their three different 1T approaches capture demand across all link distances. So, you know, they're trying to, you know, be positioned for scale up, scale out. You know, they want to be able to handle it all. Um, Obviously, risks, Lumentum is a very strong competitor. Lumentum has better operating margins. They're kind of like we talked about when we were talking about Tower versus Global Foundries. This is kind of like the Global Foundries analogy where there are several business units and the others could be a drag on overall corporate margins. And I do think that they're also priced pretty premium. I think that they're trading above or right at most analyst targets. And then, you know, maybe a talking point, like you said, we can get into this, is they do buy EMLs from Lumentum. So there's some interesting questions. It reminds me of Intel, you know, manufacturing some CPU dies at TSMC as they're trying to get their foundry going. And so when you see that Coherent's buying EMLs from Lumentum, you know, you just have to pause and dig in and ask, oh, like, what's the strategy behind that? Um, on the other hand, they are securing exceptionally large CPO purchase orders, so they're positioned for oncoming inflections. I think their CEO said something in the earnings call like, we secured an exceptionally large purchase order for our co-packaged optics silicons. We believe scale-up CPO will dwarf scale-out and be orders of magnitude larger. So I think they're trying to say there is a huge incoming inflection, and we're going to be really well poised for that, even if we're a little bit behind today. So I'll pause there. What do you think, Vic? What's your reaction?
So I like Coherent for one reason, and that is that they grow their own indium phosphide substrates. Think about that for a minute, because you know AXT is subject to China's export controls,
Mm,
which Lumentum then needs to make their uh, lasers. But Coherent is so vertically integrated that they grow their own substrates, they make their chips, they assemble the complete module if they have to, and they have everything under their belt. Like they have EML, they have SIFO, they even have these VCSELs, which Lumentum doesn't have. Of course, people argue that VCSELs are
So they
not great. Yeah,
own their own destiny. Sorry to interrupt, but it sounds like, Coherent is like they own their own destiny, not dependent on things outside of their control like geopolitics. Not as much.
for the indium phosphide wafer itself, that's a big deal because you are the entire
Mm-hmm.
Lumentum like growth strategy relies on getting AXT wafers, which are subject to China export controls, which is one big side that Coherent does not have. So geopolitics
Mm-hmm.
might work in Coherent's favor here because of this fact. And secondly, yeah, there are parts of this that are dragging it down, but I don't see 6-inch wafer yields as a fundamental physics limitation. I think it's an engineering limitation. And this
Sure.
problem has been solved over the years in silicon, because silicon was also at 6-inch at one point. It went to 8-inch, it's in 12-inch now. So we can see that like the indium phosphide industry and laser technologies are transitioning from 3 to 4 to 6 inches. So it is, there are some problems associated. I'm actually currently looking into why it is so difficult to make 6-inch wafers and what are the yield problems. It comes from having to evenly deposit over a larger area and things like that. But again, those are engineering problems and they are eventually solvable. Actually, I think they said that I have it written here somewhere. They said that at the end of the year 2026, 50% of their internal capacity will be 6-inch. So capacity
Wow.
doesn't mean good lasers, okay? It means that they are
True.
making lasers, okay, and half of them work. Oh, no, no, not half of them work. Maybe most of them work, but like half the capacity is from 6-inch. I don't know if the laser is actually competitive or not, but that's a different question. So purely from the point of wafer supply and having 6-inch that in my mind will eventually work. The question is when. And when that comes in, what
Mm.
is Lumentum's position to defend it? So I actually like Coherent from a certain fundamental point of view, even though all the attention is on Lumentum right now. Coherent is a good solid foundation, if you ask me.
Nice,
So
nice.
I'd be in.
Cool. Vixen.
I'm in.
Um, I love it. Okay. Uh, Fabrinet. Let's talk Fabrinet next. So this is back into the manufacturing space, but it's not a foundry. Tell us more about what they do and why they are part of the optics supply chain.
Yeah, so this is like on the other side of the manufacturing of the laser chip, for example. So, you know how Tower was like, they take the design and they manufacture the chip in a foundry and they make all these microstructures that make the actual silicon photonics chip. A Fabrinet is on the other side of it. So once the chip is like made, they don't even do the design. They don't do the chip fabrication. So when all the pieces are there together, right? They take them all together and build the transceiver, and they package the lasers. They do that kind of assembly stuff.
Mm.
It's like a contract manufacturer. And the nice thing is that they're a pure play manufacturer, and this is why many like companies who do optics or even big chip companies like Nvidia trust Fabrinet because they don't compete in this space at all. All they do is they manufacture this stuff and make it
Mm.
ready to
So
go.
let me ask you a question. Would this is advanced packaging or like OSATs? Is that kind of an analogy here from what people are used to in logic?
Yeah, I think that's a good one. I think this is like somehow the OSAT of the optical world, and it is a difficult space, and they have been around a long time. This is not a new company. They have been around like a good 25 years, I would say. And they have a lot of experience in like advanced high-speed optics, which is a difficult thing to get into for somebody who has
Mm.
not been doing it for all these years. So they're a precision optics manufacturer that works by contract. They don't design anything, but they make optical assemblies for everybody. And they're a Thailand-based I think they're based in Thailand, or at least they have their major manufacturing in Thailand. I don't know where they. I think I
Yeah.
remember reading here. I think they're based in the Cayman Islands. Yes, they're headquartered in the Cayman Islands,
Oh.
which was like what? And then all the manufacturing is Thailand actually, and they haven't. Yeah.
Okay, interesting.
So
I wonder where their executives
yeah,
sit.
sounds, I don't know, sounds shady. Why are you in the Cayman Islands? No, I'm just joking. I'm sure it's a perfectly legitimate
Yeah.
operation. But yeah, so their one major advantage is that they have this really good net margin compared to their competitor, Jabil, who also assembles these things. They are not, they make a lot more net margin than their competitors. And basically,
Hmm.
they're a really solid company in the OSAT world of optics. And the risks are though.
They do LiDAR too.
Oh yeah, they do lidar. Yeah, interesting. Yeah, like there are other parts of the optical world that Fabrinet deals in, which is cool.
Yeah. Yeah. Sorry, carry
Yeah,
on.
no, that's a good one. Because but the major risk is that they are the ones who put all the optic stuff into NVIDIA Spectrum X and what is the other one? Quantum X. Uh, yeah.
Mm-hmm.
So all the
Yep.
photonics that went into those network switches were all Fabrinet. So NVIDIA is a massive customer concentration for them. Um, but like everything, if they don't have enough EML lasers from Lumentum or Coherent, what are they going to manufacture? Because you're basically downstream in the supply chain. If you don't have enough wafers, if you don't have enough lasers, you're going to be short of
Mm.
manufacturing, right? So it's like really it's at the mercy of all the customers' decisions and what happens upstream in the supply chain.
Sure.
So they're a good
Yep. That's a
assembly.
good point.
They're a good assembly house, I would say. But yeah, no, what do you think?
I mean, it sounds like a solid investment. I wouldn't expect just off the cuff. I wouldn't expect like, you know, this is a 10 bagger,
Hmm.
right? But if you're like, oh, I need a place, let's say your thesis is maybe some of the big logic companies are sort of just like tapped out and you want to invest somewhere else. This feels like something that's more along the lines of TSMC, where you're like, yeah, this is going to grow. Might be, I don't know, tens of percentages a year in a good year, but it feels like essentially a safe bet, but that still has upside. Especially if you believe in the in optics in the data center, and if you believe in lidar optics, like let's say in personal vehicles. So probably some different angles that you'd be investing in. Of course, I'm sure you'd have to read about if they have other. Do you know that they have other business units?
Fabrinet.
Yeah, or is it pretty much just optics?
Their specialty is optics, but they do
Yeah.
have
Okay.
non-optical communication parts as well. Um,
Okay.
but it's like let's say about a fourth of the company. They do some industrial lasers. They do some automotive stuff. I think that's where the lidar comes in. Um,
Yes. 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 That
yeah,
makes
I also
sense.
have in my notes here
So,
that they
yeah.
do some high performance computing. That's interesting though. I never read about that part
Oh,
earlier.
interesting.
Oh wait, I also have it here
Feels.
that it's yeah. Uh, no, that's very interesting actually. It says yeah, it might be a wild card here. I have to look into why they're doing high performance computing. That's interesting though. But no, bulk of their money
Yeah.
comes
Totally.
from three-fourths of it comes from optical communication. So that's their stronghold.
Got nice. 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 Sounds. I mean, if I was trying to decide where to invest, this would be compelling. Is a good solid investment. Also, maybe we should go to Thailand and like take a tour of their facilities or
Love to go
something.
to the Cayman
Get some
Islands
Thai
too, just
food.
to see the headquarters.
Hey, there you go. I don't even know where those are.
We'll go map it after this.
But yeah, my geography's not great.
All right, let's move on to the last one because this episode is already getting long enough. So the last one is actually a very old company. It's been around like 100 years now, and it's amazing that we're still talking about investing in this thing, which tells you, imagine the bulls of this company that were like 100 years ago. They had no idea that all of this is going to end up in like optics and data centers. But yeah, what we're going to talk about Corning Glassware. What do you think about that? I don't know. Maybe you want to introduce this one?
Yeah, sure. Corning Glassware. So I've actually been to Corning, New York and toured their facilities, not like as an industry insider, but just as a tourist. So the parts of their, museum essentially that they let you see. But I had a friend in college who his folks, he's from that area, kind of the Finger Lakes area in New York. And so I actually went and saw it and just, amazing. It's so fun to understand the material science and all the engineering, the optics and everything behind how do you manufacture, these tiny strands of glass and send light down it. It's super interesting. So they are the dominant optical fiber cable and connectivity company. And so, of course, when we're talking about scale out, when we're talking about CPO and even scale up going to optical, that implies that there's fibers connecting everything, optical fibers connecting everything. And of course, like, you might go back to like the 90s build out and bust, and you might think Google Fiber, it's those fibers. But right now, obviously, the opportunity is just connecting all those GPUs in data centers as fast as companies can stand them up. You need to connect them. So every transceiver that we've talked about needs Corning fiber on both ends. AI data centers need 10 to almost 40x more fiber than the traditional cloud, which is super interesting. Of course, when you're thinking about training runs, GPU training runs, and you're talking about hundreds of thousands, or even with Trainium and Project Rainier, like a million Trainium 3 all connected together, all talking, that is a ton of fiber. And that is definitely very different than more of your distributed cloud for just like, API serving APIs or something. So more transceivers means more Corning, and the moat is kind of like with a lot of companies we talked about. Like, this is deep tech, this is interesting, like materials science and fabrication and process. So, glass science and fiber manufacturing know-how built out over decades. They recently locked in a $6 billion multi-year deal with Meta for Llama 4 training cluster connectivity. And what else? They're partnering with global foundries on fiber to chip connectors for CPO. So they're trying to go ahead and be very well positioned when CPO takes off. They're going to be there. I think, like with any company that has existed for a while and has a business unit that's in the right place in the right time, they're probably all their upside is here from AI, and they're probably going to be priced for the AI fiber build out. But of course, optical is only a portion of the revenue. I think about 40%, and the rest is other display glass. Yeah, another reason you might have heard of Corning was like Gorilla Glass. When we went from BlackBerry to iPhones having glass on them, and so Corning plays in these spaces: display glass, auto, life sciences. Those are not gonna take off in this, at least not right now, in the same way that AI is. So, you just have to think about how is this umbrella business priced? And I'm really excited in one business unit. How do I think I should model that out? So let me see. Any other risks? Obviously, if there were to be a slowdown in hyperscaler capex, that kind of it directly would squelch the upside for Corning. But I personally don't foresee any slowdown. You might see a deceleration over time, but clearly we're talking hundreds of billions of dollars every year going forward. Um, so with that, what do you think, Vic? Would you invest in a glassware company?
Yeah, I would, but I have a couple of caveats here. First of all, I like that they have a 100-year moat in making glass. I mean, that's about as
Mm,
good as moats get. They've been doing this 100 years. We
right.
know how to make glass. That's a strong statement. And the $6 billion deal is a big thing because it gives a lot of visibility into how hyperscalers like Meta would want to lock up fiber supply for the rest of the decade. So it shows you that there is a significant importance to this. But it is a good business to invest in. The only thing that would make it not attractive so all of a sudden is if this whole optics build out gets pushed out or peters out for whatever reason. And uh,
Mm.
and or hyperscalers decide copper is not yet dead, why don't we still continue with copper? Why does everything have to go to CPO? Maybe it's not required. Maybe we just stick with copper as much as we can, and optics only when we must, And when that happens, then why do we need all this fiber? We don't. The demand will be significantly
Right.
lower.
So, yeah, and so I really think it's a timing thing, as all of these companies are, which is like, okay, the scale up TAM for these optics companies is huge and net new for them, and scale out is always going to be optics at certain distances, but that's pretty well known
Hmm.
today. And so if it's not like, oh, scale up in optics actually isn't a 2027 2028 story, but it's more like a 2030 or 2031 story, then obviously you'd be investing in a company and it wouldn't be inflecting like you thought now, and your money would just sit for a long time until it hits that curve.
Yes, exactly. So if we are not in the CPO mode immediately, although it seems like we are getting close, I don't know if we really know when CPO for scale up is coming or optics for scale up is coming. We don't really know. So if we don't really know, I don't know how we can also model how much demand for glass fiber there's going to be, and therefore, and therein lies the risk.
Yep, yep. Yeah, it just depends on who you ask. If it's people
Mm.
that are in the copper TAM, they're going to say not
Yeah.
now. And if it's people that are in the optical scale up TAM, they're going to say 2027,
Yes.
2028, right? So that's the question that people can go dig in further to. It's like, when do they believe the timing is?
Yeah, yeah. This is cool. So I think we shouldn't get in any more
Uh,
than this. We've been at this almost an hour now. So this
yes,
is good
this
for
would
an
be our longest
episode.
podcast.
Yeah.
Yeah, totally. I hope you all listeners, I hope you liked it. That's it for today. Thanks for listening. If you're enjoying Semi Doped, we'd love if you give us a 5-star rating and a quick review on Apple Podcasts and Spotify. Thank you to all of our YouTube listeners. We're seeing thousands of you, which is really cool. Subscribe, comment, whatever. We read it all. So thank you in advance, and we will catch you next time.